The market moves in waves. It moves downwards in waves and it moves upwards in waves. And this stair-stepping action is something that we can take advantage of. Now, what's important to this stair-stepping action is how much or how far does the market move against you in order to consider that it's going to keep moving forward. Hi there, I'm Russ Horn, and I'm going to show you about Fibonacci pullbacks. Now, we've got an indicator here, Fibonacci pullback indicator. And when I draw this on the chart, it will give me the top and the bottom. And what's in the middle here are the 38.2% retracement level, the 50% retracement level, and the 61.8 retracement level. Now, the 61.8 is the golden number, the golden ratio. This is a Fibonacci number that a lot of traders really pay attention to. So what we have is in between the 61.8 and the 38.2 is what I like to call the Fibonacci window. With this, I can draw a box inside, and this gives us a window or a zone. Something that I'd like to see the pullback get to. If the pullback occurs under the zone or above the zone, the pullback may not be fueled properly in order for a continuation. I'll give you some examples of how this works. Let's get rid of all of this stuff. So we're going to take a look at the center of the chart here. Market moves down, gives us the pullback, and then continues. So this is a really nice market move. We're going to take a look at this first market move here. So I'm going to take my Fibonacci tool and mark off the top to the bottom. So I'm going to click and then drag to the bottom, which would be here. And what I'm looking at is a pullback, and I'm going to see how far does that pullback go. Does it get into the window? Does it get below the window or above the window? And in this instance, it gets right into that Fibonacci window. It hits that 38.2, gets a little bit above it, and then it reverses, and then it continues to move down. So this is a nice indication that this Fibonacci retracement is basically fuel for a continued move. Now, if I take a look at another example here, let's look at this leg. We have this leg down, market comes back up and moves back down again. So if I take my Fibonacci tool, top to the bottom, I can see that we do not get into the Fibonacci window. We don't get into that zone between the 38.2 and the 61.8. We don't get in there. It gets about halfway to it. And that continued move down is very small, very short. It doesn't continue to move very far. This would be a struggle to make any money on a trade like this. Again, what I'm trying to find is a pullback that gets into the window. Let's take a look at some other examples. We've got a market that moves upwards and then gives us a bit of a pullback and then continues to move up. So if I take a look at this leg from the bottom to the top of that movement, draw with my Fibonacci tools, I can see that that pullback gets us to the Fibonacci window, just the top of it, but that's okay. It gets to that 60, or in this case, because we're drawing it from the other direction, the 38.2 retracement level. And then when it does move, it continues quite nicely. And this move down, we get a leg that moves down, comes back up, and then continues to move down. So let's take a look at that one. So we're using the top and the bottom, and the pullback gets right to the bottom of the window. So this is a nice one as well. Remember, this is a window. So as long as we get to the bottom, as long as we get to the top, anywhere in between, that would suffice for me to be an ideal kind of market pullback. If the pullback is much smaller and doesn't get to the bottom of the window, then I'm not that interested in the trade. If the pullback is much higher and gets almost to the top of the window, I'm also wondering if this is a trade worth taking. Once these pullbacks get into the Fibonacci window or the zone here, right in between 38.2 and 61.8, then I am eager to look for a continuation of that initial movement. We have a market that moves down, comes back up, and we get considerably higher than the 61.8. Now, this isn't something that I can call a continuation move. We do get to the bottom, to this zero level, kind of where this area of support is, but it doesn't go beyond that. We don't get a market continuation, and that is because the pullback is significant enough that it could be starting to tell us that the momentum for this downward movement is starting to slow down, because the upward movement as a result of the pullback is quite extreme. It gets into this upper section here. It gets beyond the window into this upper section. And from there, we're looking at a potential change in the market direction, simply because that momentum is enough to push the market up as high as that. So most decent pullbacks are going to give us that window range. Look at this one here, the swing low. Market comes back up to the 50% level inside the window, and it continues to move. This move up with the pullback, market gets just about to the bottom of the window, but it's within that range, and then the market continues to move. So for me, the ideal pullback is inside of that Fibonacci range between, let's just plop this on the chart again, right in between 61.8 and 38.2.